Hello, everyone. Y'all, we made it. It's the last video. It's the last sections that we going over with. So, before we get into anything, I am in a different location today. Try to be more quiet for you guys because you guys know my life be lifing and not be having kids, and sometimes you can hear them in the background. But today there's no kids. We are quiet. We in a great location right now, and we gonna get it done. All right, so for those who do not know me, my name is Ramera, aka Mara the Goddess. You can follow me on all your social media platforms at Mara the Goddess 22. That is MARTHEGODESS and two number twos. Yes, I know it's one D in Goddess. That's how I want it to be. Make sure that you like and subscribe and sharing, okay? We're trying to get up there. I have done on YouTube 113 videos. Today's about to be the 114th video. We about to wrap it up with the Candlestick Trading Bible. So make sure you like, subscribe, share, follow me, all your social media platforms. Let's help me get my YouTube up, okay? Um, a little bit about myself. I am 30 years old, mom to three wonderful boys, and I rob banks legally, and I'm here to teach you how. How I do that is going over the Candlestick Trading Bible. Um, if this is your first time, I definitely want to welcome you. Thank you so much for subscribing and coming to my page and sharing the information who you think may know this, who may need this. Um, I got the Candlestick Trading Bible. It's a free download on any of your internet browsers. When I first started out, I downloaded this book, printed it out, put it in a notebook, and the rest is history. I am continuing to go through this book each and every day, each and every time, because it's always like a refresher to me, and always find new gems that pop up out at me as well. So I do want to let you know you are in the right place to learn about the Candlestick Bible, but you're just at the wrong video. But have no worries, I got you. In my YouTube playlist, it's called Free Game. Get in there. We're going over all the content. We have went over almost all the content, okay? A lot of information, candlesticks, the history behind the candlesticks, psychology of the candlesticks, trading tactics, and different other candlestick patterns like the engulfing bar, the inside bar, and the inside bar false breakout patterns as well. So today we are going over the last three sections here. So you just at the wrong video, but no worries. Once you get back here, you'll be in the right place at the right time. Make sure that you do your homework, you train your eyes. This is not a race, okay? Don't just go going through the videos because it's vital information. Yes, I know it may sound a little boring in the beginning, but once you get this down packed, I swear to you, it's gonna change your life, okay? If this is your returning time, I want to thank you so much for returning back to me and just listening to me and my craziness. um, so yeah, before we get started off with everything and before I let my new people go, I have to hit you guys with a motivational quote for today. Which will be what? Let's see what they got for us today. Oh, no matter how much it hurts right now, someday you'll look back and realize it changed your life for the better. I don't know who that's for, but that may be for me too. Uh-oh. That may be for me too. You it was so crazy. I just kept getting a lot of confirmation. Everything was in alignment. Don't worry about your current circumstances. Just focus on the big vision and what you're trying to set for yourself. For me, sometimes I let my current situation or the current problem that's in my face today kind of stop me or slow me down, make me stagnant. But I always got to keep pushing because I know that whatever the problem was is not there anymore. So yeah. If you are new, stop watching this video, go to the previous videos. I will see you when you get to this video. If you are returning, let's get into it. I'm so happy. This is a bittersweet moment for me and for you guys. I'm so proud of you guys for sticking in. Like, you did it. You did it. And I'm so proud of you. So yeah, it's a lot of talking these next couple of sections. I'm not gonna lie to you. I'm gonna try my best to do what I can do and not try to have no hiccups. But y'all know I'll be messing up on my words. Okay, let's just put it out here. We got to the end of the last section. I'll be messing up on some words. But yeah, it's a lot of talking. I'm gonna try my best as well because I am allergies is whooping my ass today. I'm like itchy. My face is like, ugh, my eyes. I just want to go to sleep and just stay in my bed and I don't know, not have to deal with the outside, but whatever. All right, so let's get into it. Trading examples. In this section, I will show you different trade examples to help you understand how to trade the market using all strategies discussed in the previous section. See the first example below. All right, we got an example here. I'm looking up because I can mirror my screen. Oh, I'm so happy. Hey, beautiful. All right, we got an example here. As you can see in the chart above, the market is trending down. So as a price action trader, you would try to follow the trend and look for powerful signals at the most powerful key levels. The first signal we got in a pin bar, is a pin bar that was rejected from a support level that became resistance. So that's that pin bar. It rejected that support level because at once it was support, it broke it and now became resistance. Okay. The second factor that support our decision to sell the market is the rejection of the pin from the 50% Fibonacci retracement. So we feel from our high to our low, and this is that golden zone, that golden area that he suggested, 50 to 61%. And we got the rejection based off this wick. Okay. And then the third factor that encourages to take this signal is the rejection of the pin bar from the 21 moving average that was acting as a dynamic resistance. So this green line is the 21 moving average. We have, is this the pin bar that they're talking about? Because where is the engulfing that they was talking about? Oh, that's the third factor. Okay, so the first signal was the pin bar rejection, and then we got factors of that 21 moving average acting as a resistance, the rejection from here, and then the second signal. Okay, the second signal was the engulfing bar pattern, engulfing bar candlestick pattern. As you can see in the chart, this candlestick pattern was formed at a resistance level in line with the direction of the market. Okay, engulfing, y'all know my baby is the engulfing bar. Okay. All right, this is how you can trade trend markets using our price action signals. It's simply just identify the trend in the key levels. It can be a support or resistance level, a 21 moving average, or the 50 to 61% Fibonacci retracement. All right, so we have to identify the trend. Are we going up? Are we going down? Are we ranging? Is it a choppy market? Stay away from those choppy markets. Then we have to identify the key levels, okay? You've identified the key levels. These key levels can be either our support or resistance. It can be that 21 moving average, or it can be the retracement of the 50 to 61%. All right. Now you wait for a signal. So you wait for a pin bar, an engulfing bar, or an inside bar, or the inside bar false breakout to form near these levels, which is that support and resistance level, or the 21 moving average that's acting as a dynamic support or resistance, or that retracement into the 50 to 61 percentile. All right. So you wait for that signal from those price actions, and then you execute your trade. It's not that complicated. All right, so they have another example below. Looks like in this case, we are ranging with the horizontal in between the horizontal levels. So it says, as you can see in the chart above, the market is trending is trading horizontally between the support and resistance level. This market is completely different from trending markets, and the strategy to trade it must be different as well. All right, we're not doing the regular uptrend and downtrend. We got to switch up the strategy, and that's okay because if we are people, um, if you are a person who's okay with change, it's easily just to change your strategy. And if you're not good to change, just take it step by step. You'll get it. So the market is completely different from trending markets. And the strategy to trade it must be different as well. In ranging markets, we trade from boundaries. I mean, from support and resistance levels. Don't never try to trade inside the range. Okay. In the chart above, we have two powerful signals. The first signal was the pin bar that was strongly rejected from the resistance. Okay, what is that? They got this wrong because this was, well, I guess support then resistance, but the resistance should be at the top and the support. So this is the resistance level, and then this is our support level. All right, so it says in the chart above, we had two powerful signals. The first signal was the pin bar that was strongly rejected from the resistance level, and the second signal was the inside bar formed near the support level. Okay, where's that example at again? Inside bar near that support level. So don't worry about this because this is actually resistance and then this is actually support. But we know this, guys, because we do our homework, right? We train our eyes. All right, see another in the chart above, we had 2%. Okay, so see another chart below. Here we have another chart. Looks like we have some pin bar signals that's taking place and also 21 moving average. We are trending down. So all we're looking for bearish price actions. It says, as you can see in the chart above, there are three powerful pin bar signals. When the market approaches the 21 moving average that acts as a resistance level, sellers reject buyers and form a pin bar that gives us a good entry point. All right. Those signals, 21 moving average is that 21 moving average is acting as a resistance. We are selling, so we have our entries. All right, money management strategies. Before I go into this, y'all, please pay attention to this because this will save your life. This will save your account. All right, so now you have the strategies, you know how to analyze the market, you know when to buy, when to sell, and when to exit. You know also when to stay away from the market. You just talked about those choppy markets. This is important for you as a trader to know, but you are still missing the key to the castle, the money management plan. The most important thing that traders don't talk about is the money management. This is what makes a difference between successful traders and losers. If you trade without a money management plan, you are just wasting your time and money because nothing is going to work for you, even if you have the most powerful trading system in the world. So we got the Holy Grail. We got this Bible. They didn't give us everything that we need. But if we can't get this money management plan together, then it's pointless. Most traders focus on how to enter the market. They spend months and years looking for the right system. I don't know. I mean, it says, I don't want you to think like them. You should think differently if you want to become a successful trader. All right, money management position sizing. One of the most important component of money management is position sizing. What I mean by position sizing is the number of lots you are risking per trade. All forex brokers now offer mini lots as the default position size. The smallest value for a mini lot is approximately $1. There are forex brokers that offer 10 cents for a mini lot, which represent an opportunity for traders who don't have bigger accounts. They could begin with $250 and they still have a chance to grow it. When it comes to position sizing, you have to think in terms of dollars instead of pips. Let's say you are trading 3 mini lots of CAD USA. This means you brought or sold $30 worth of thirty worth of US dollars. 30.000 of US dollars. If the market moves in your favor, you will win an amount of money equal to $3 per pip. If you make 20 pips, you will have profited $60. So 3 times 20, because we went and got TP for 20 pips, $60. All right, let's break it down. Let's break it down. One standard lot is worth about $10 per pip, and one mini lot is about $1 per pip, and one micro lot is equal to 10 cents. If you open a mini trading account, you should think in terms of dollars risk instead of pips. Let's say you put 50 pips stop loss and 100 pips as a profit target. This means that if the market hits your stop loss, you will lose 50 pips, which is $50. And if the market hit the profit target, you will win $100. The size of your position depends on whether you have a standard or mini account and how many lots you are trading. This information is important to you because this will help you know how much money you risk on each trade. All right, risk to reward, guys. The risk to reward ratio concept is what will make you a winner in the long run. Before you enter any trade, okay, before you enter any trade, you have to know how much money you will win if the market goes in your favor and how much money you will lose if the market goes against you. Don't never enter a trade in which the profit is less than the amount of money you risked. If you it says if you will risk $100, for example, your profit target should be at least 200. The risk to reward ratio of 1 to 2. All right. So when we're going in those charts and we're putting our tool up for our stop loss and our profit, we want to have a minimum of 1 to 2. Okay. I think we talked about this in money management or in a couple, I think it was in the engulfing bar strategy. We talked about money management and want to make sure that you're using that 1 to 2. Let's suppose that you took 10 trades with 1 to 2 risk to reward ratio, and every trade you risk $100. So 10 times 100 is 1,000. 10 times 2, 2,000. You get that? We're risking $1,000 to make $2,000 with our 1 to 2 and our 10 trades. So it gives us an example. You won 5 trades and you lost 5 trades. So you will lose $500, but you will win 1,000. So the benefit is $500. All right. So with that 1 to 2, we're risking $100 per trade. 100 times 5 is 500. But remember, we got that 1 to 2 risk to risk to reward. So 10 times 2, which is 20, and we won 5. We made $1,000, but our profit was $500. All right, the power of the risk to reward ratio. You shouldn't think that you have to win all your trades to become a successful trader. If you could take the advantage of the risk to reward ratio, you will always be profitable. Minimum, guys, 1 to 2 risk to reward. We are not going into the market where we're risking the same amount of money. If we're gonna lose $50, we want to win $100. We don't want to lose 50 and just gain 50, because at the end of the day, we didn't really profit nothing. You did profit $50 if you don't hit your stop loss. But what if you hit your stop loss? We lost $50. Okay, we go back into the market again. I won $50, but did you though? No, you broke even. That's why you gotta have 1 or 2, because on that next trade, you could have won $100 and you would have made up for your losses. Okay, and profit. All right, so the importance of a stop loss. Guys, I used to be a victim of no stop loss. And I have had blown accounts because of this shit. Don't be like me. Okay. All, all good methodologies use stops. A protective stop loss is an order to exit a long or short position when price moves against you to specific price. To specify price. Sorry. The stop loss ensures against a usual large loss and has to be used in one way or another. An initial stop loss can be placed with your order on the trading platform. The trade will be closed automatically when or if the stop loss is hit. This type of stop loss will allow you to execute your trade and go spend time with your family or friends. This will help you to trade out of your emotion because you know how much money you will lose if the market didn't go in your direction. Lots of traders use mental stops. When they enter a trade, they don't place the stop loss because they think that the broker will hit their stop loss, which is not true. The reason behind using mental stop is the human psychology. Humans hate to lose money. And if you don't accept losing money as a part of the game, you will never make money in the market. Okay. So if you are that person that just hate losing money or think that, you're not going to get your money back or, it's, I don't know. We got to unlearn that. You have to accept that you're not going to win everything, especially in trading. But the part of the game is making sure that you have that one to two risk in the world and making sure that we already know if I lose this trade, I'm going to be losing this amount of money. They said don't worry about the pips. You need to worry about as far as dollar amount. So if we're risking $1 per trade and our stop loss is 20 pips, how much money did we lose? Oh, we said $20. Okay. Um, Before you enter a trade, calculate how much you can't be sure that the market will do that. Okay, no, you never make money. Don't never okay. Don't never think of using mental stops because you can't control the market. You can't be sure that the market will do this or that. Before you enter a trade, calculate how much you may win and how much you may lose. Place your stop loss order and your profit target and forget about the trade. Set it and forget it. Don't ever risk money that you can't afford to lose. Okay? Don't ever risk money that you can't afford to lose. I'm going to say that one more time. Don't ever risk money that you can't afford to lose. I got a lot of questions from traders asking me about how much money they need to start trading. First of all, you have to take trading as a business. You can make money in this business and you can lose it as well. The amount of money that you need to start trading depends on the amount of money that you can afford to lose. Don't ever borrow money or risk big amounts of money that you can't afford to lose because trading is all about emotions. If you trade, you are afraid to lose your trading account. You will fail in this business. Okay, because trading is all about emotions. If you trade and you are afraid to lose your trading account, you will fail in this business because you will be controlled by your emotion and this will affect your trading decision. One second, guys. Okay, so sorry about that. Because trading is all about emotions, you trade, never lose, you will fail because you will be controlled by your emotion. This will affect your trading decisions. You will not be able to follow your trading strategy and you will certainly fail. The best thing to do is start small, try to get as much experience as you can, and build slowly your trading account. This is how successful traders become successful. Guys, if you don't want to start trading real money, I always encourage my people to start with a demo account. That's the best advice that I can give you coming into trading. You got everything that you need. You got your money management. You know how much you're risking. Just use a demo account until you can build, you have that confidence to where like, okay, I have this amount of money that I'm going to invest in myself. I know what I'm already doing. Why invest the money? Why put the money into the account and you have no clue? You haven't been doing your homework. You haven't been practicing. You haven't been training your eyes. Like, why? We're not doing that. We're going to get in this demo account. We're going to build that demo account. And when we're confident enough, we're going to go into our live account and trade it. Okay. It's all about repetition. So before I go into the conclusion, just going back, we just went over as far as the trade examples and how to identify as far as the signals and the factors what play, to be able to make this technical analyst, this analysis, sorry. All right, we got our technical analysis. We know what we're going to be doing in the market. We have our confluences, which is like our support and resistance, Fibonacci. We have our pin bars. We have that price action. We got it all. We got our money management together down, right? Because we know how much we losing and how much we're winning, right? We did put that stop loss on it because we're not risking more than what our accounts can handle. All right. And then we want to make sure that we have a good risk to reward, at least a minimum of 1 to 2. All right. We already talked about stop loss. All right. So let's go into the conclusion. Congratulations. If you have made it to this point, this is a sign that you are hungry enough to succeed in this business. I have provided you with the most powerful price action strategies that you can use for the rest of your life to make money trading financial markets. Your success as a trader has nothing to do with your education background. You could be a doctor, a lawyer, a physician scientist. You can still blow that account, baby. It says if you don't follow the rules, you would end up blowing your entire trading account. Trading is like learning a new skill. You must be ready to put in time and effort. Let me give you an example. If you want to get a degree, sorry, my skirt, I didn't like it. If you want to get a degree from a university, you have to spend at least 3 years. Right? You wake up every morning, study hard, you follow up with your classes, and if you are enough serious and disciplined, you get your degree. Same thing when it comes to trading. If you are enough disciplined and you put in time and effort to learn, you will acquire a skill to feed yourself and your family for the rest of your life. You will get your financial freedom so you would never think of a day job again. Okay. I want to just go back and touch on this. You wake up every morning, okay? You study hard. You gotta study. You follow up with your classes. In this case, you follow up with your trades. And if you are enough serious and disciplined, you will get the money you deserve. All right. Some traders spend more than 10 years to find a winning strategy and become profitable. Others spend 20 years without results. Fortunately, this will not be the case for you because you have the map, you have the strategy. You will not spend years trying different indicators and strategies. Okay. You have everything you need here. You will need what you would need is time to master these strategies. So give yourself some time and spend as much as you can. Spend as much as you can to learn because this is the only way to succeed in this business. All right. If trading is a hobby for you, make that the best damn hobby you got. You don't have to turn it into the business. Over time, you will develop these trading strategies because you will determine what works for you and what it doesn't work. And that wasn't me. It's a book. And what doesn't work. Keep practicing and learning from your mistakes. Don't think in terms of making money as fast as possible. Think in terms of becoming an expert of what you do. Then money will follow you wherever you are. Good luck. Yeah. We freaking did the damn thing. I'm so proud of you guys again. I want to I just want to say, I just want to say uh that I'm proud of you guys. I'm proud of you guys for sticking in. I'm proud of you guys for training your eyes. I'm so proud that you actually took the time, even if it's 20 minutes to an hour or 30 minutes, whatever time that you do have to go over and read each section again. If you need to go over maybe for 30 minutes, let's 30 minutes, let's back test. And I'll be going into that you guys gotta follow. Make sure you in my stuff. I will be talking about how to back test. Even if you don't have a paid membership on TradingView, you can be able to still, back test live. I'm just so proud of you because you're not for me, for yourself. You're trying to change uh your financial game plan. You're trying to change that financial tree. You're trying to make it profitable. And even if you don't want to become a 6 to 7 figure trader, um, let me fix my face because I don't like this. I'm so sorry, guys. But we did it. We making it. I told y'all these allergies is getting to me. It is. Um, I don't know where I was at. We was talking about. I'm talking about how I'm just so proud of you because you stuck in. You took the time out, even if this is the no sleep run until you get it. Listen, I'm proud of you. Don't stop. Do not stop. Keep going. Keep practicing. You lose a trade, that's okay. Go back and figure out, hey, why did I lose this trade? Or you can go and go into another trade, okay? Accept your loss and move on to the next. It's like how we doing with boyfriends and girlfriends, okay? You broke up with me, that's cool. I found somebody better. We'll have a winning trade, okay? And it'll be more than the one or two, okay? Because we not basic over here. But I'm just so proud of you. Make sure that you like, subscribe, and share, okay? Because someone may need this. Someone may need this. And before I let you go, if you are a mom, I'm a mom. I'm a mom of 3 boys. In addition to my 3 boys, I also have my 2 nieces that I take care of. If you are a mom, this may be something. If you like me and you really passionate about this, sometimes you're not gonna be able to sleep until you get it down packed. Sometimes you're gonna have to put the babies and put the kids to bed first, get them quiet, get them settled, and then maybe do 45 minutes of trying to learn because this may be a exit plan for somebody. This may be a deposit to your business that you want to actually fund for yourself. This can help you. This can change your life. I am a freaking witness, okay? This can change your life. I am not a 6 to 7 figure trader as of yet, but what I can say that this works. I'm just a regular 30-year-old girl from Atlanta, Georgia. who made this work for herself and her family. My 7-year-old wants to start trading. He wants to start learning. And I am not going to stop him because I learned that skill set to where I could teach my son. If you are a new beginning mom, because I remember um well, my youngest son is 2. So I've been doing this for a couple years now. And I remember the baby up at 3 o'clock in the morning. Okay. 3 o'clock, getting him settled. It don't, especially if they're a new baby. Feed them, burp them, whatever. Put them in a rocker, put them back to sleep. Or if they're up, you up. Especially those fresh babies, they don't require them. Like you can literally sit them in the of course they require your attention and your love and affection, but I can learn this while I'm with my baby right now. Especially if you're just having the baby and you're going through your the leave. You got 6 weeks. I know it probably took us a little bit longer because I kept doing week by week, but you got 6 weeks. I challenge you to learn at least one of these strategies that they're giving out.